I'm
Afternoon,
Chairman.
ladies and gentlemen. It's Eric Coffin. I'm here at the November Metal Investors Forum. I'm here with Robert Giustra, and he's going to talk. We're going to talk today about a company that, while it exists, it's not a public company right at this moment, but it will be very shortly, by the name of Allegiant Gold. Allegiant is a spin-out of essentially all of the projects, I suppose, in Columbus Gold, except for your Guyana resource,
Right.
Basically all of your U.S. property package, I guess.
Exactly right.
It that way. How many projects end up in Allegiant after the spin-out?
14 projects, 11 in Nevada, and 3 others in and around Nevada.
Okay, and one of those is Eastside. That's the one that you guys have probably put the most effort and money into in the last little while. That one has a resource, correct?
It does. It has 1.5 million ounces in various categories, 300,000 ounces approximately that are classified as historical, and 1.2 million ounces classified as geological resources, of which 720,000 are within the pit.
Okay. And one of the things that's interesting about Allegiant, I mean, if you're someone who likes drill speculations, Robert's really going to hit it hard. And maybe you want to talk about the CEO. I mean, you guys have worked together for a very long time, but just maybe give people an introduction to Allegiant's CEO, who, of course, has got quite the pedigree when it comes to Nevada exploration in particular.
He does. Andy Wallace is the principal of Cordex, which is is essentially the exploration team of Columbus and now Allegiant. Cordex is owned by Andy Wallace, whom has a long history of discovery in Nevada. He's credited personally with 5 gold mine discoveries, the deposits that actually went into production, and a number of them are still producing. And the Cordex group itself is credited with 9 gold discoveries, of which 8 of them were producing gold mines. So suffice it to say, Andy knows Nevada very, very well, and has agreed to come on as Allegiant CEO.
Yeah, I know. I mean, I know from talking to Andy, he's a big believer in Eastside. I mean, I know he thinks that's going to get a lot bigger. But one of the things that's interesting about Allegiant as a vehicle for someone that likes trading these things, and for anybody that likes speculative investing, is you've structured this so that when the deal is complete and consummated, you will be basically in a position to pretty much drill for the next year, I suppose, right? I mean, you're just going to go at it.
That's exactly right, Eric. I've really been waiting for, I'd say, 10 years for market conditions to change so that exploration would be favorable again. And it feels like now is the right time for the spin out. Right. The projects in our portfolio were all identified and acquired by Andy Wallace over the last 10 years from basic prospecting. And while the environment wasn't right for early stage exploration, we did all the early work to prepare the properties for when the time was right to drill. So all 14 projects have all the geochem and geophysics and mapping done. Targets are delineated, and they're ready to be drilled.
And I think a couple of them, I mean, I think we'll maybe touch quickly on one or two. I mean, I know the one, I think it's the one, getting the second biggest drill budget is Bolo. Bolo has exhibited some pretty interesting numbers, and because you guys did a couple of drill programs when nobody cared, but those did generate some pretty interesting looking drill results.
Exactly right. So it's odd to have 2 flagships. We have Eastside and we also have Bolo. Bolo is a Carlin type showing. We've never done a resource estimate on it, but if we did, there's a resource there now. We drilled in 2008, and it happened to coincide with the financial crisis. So it was just not noticed, despite a very long intercept, a very good grade, some 2 grams plus. Then we went back in 2013 and did some more drilling, and one of the holes from surface returned 132 meters of 1.3 grams.
Nice.
Within that intercept, there was 30 meters of 3.24 grams and some other 30 meters just at the very bottom of that hole from 1 to 2 grams. In addition, there was a lot of silver. It was a whopper hole, but again, not the best timing. We
Yeah,
drilled
right
that
at the
hole in
bottom.
2013, and it just went unnoticed.
Right. Okay. Well, I mean, I think you can see the flavor of this here. I'm not sure specifically when this video is gonna become available. If you got, is there symbol reserved? You do have one reserved.
Yeah, we reserved the symbol in Canada, AU.
Okay.
So that will be the symbol.
Okay. So AU, once the spinout is complete from Columbus Gold, essentially, if you see this video before the spinout, there's sort of two ways to own it. One is to either purchase Columbus before, and I think it's 5-to-1 is the ratio, 1-to-5.
5-to-1, correct.
Yeah. So basically, every 5 shares of Columbus, you would get a share of Allegiant. Alternatively, Allegiant is in the midst of doing a 60-cent financing. Or, obviously there's the market once the thing starts trading, but, it's a very interesting vehicle. It's already got a substantial resource, but I find it interesting because I like the idea of the fact that you're going to be drilling, 9 different projects in the next year?
We're going to drill 10 in 12 months.
Okay, 10 projects, 12 months in a jurisdiction that everybody's comfortable with and that does tend to get leverage for discoveries because everybody likes the jurisdiction. So I think it's a very, very interesting drill play, and it's something you really got to keep an eye on. Thanks for giving us the introduction to it, Robert.
Thank you, Eric. Appreciate it.